Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, NVIDIA set to open with a $5 trillion valuation. This will be the first ever company to reach that milestone. The stock did close at a record high on Tuesday after announcing a slate of new technologies and partnerships at its GTC event in Washington, D.C. Analysts this morning saying CEO Jensen Huang's keynote speech there hinted at higher than expected data center revenue next year. And investors will also be closely watching other Magnificent Seven stocks. Meta, Microsoft, Alphabet, they'll all be reporting earnings after the closing bell. Plus, on the trade front, President Trump says he plans to lower tariffs on China and discuss NVIDIA's Blackwell chip with Xi Jinping. The president making the comments as he traveled from Japan to South Korea. While in South Korea, officials announced an updated framework for their trade deal with the U.S. Meanwhile, the Senate voted to block Trump's 50% tariffs on Brazil. That vote coming amid growing tension in the Senate over how Trump's trade war has affected farmers and small businesses. And the Federal Reserve rate decision due out today. Officials are poised to cut rates by a quarter percentage point at today's meeting. The FOMC will not release new forecasts or rate projections this time around, but investors will closely watch Fed Chair Powell's press conference for clues on its rate path. Tune into Yahoo Finance for full coverage of the decision beginning at 2 p.m. Eastern Time. Let's get a check in on stock futures right now. Indications for a higher open here this morning. Optimism over that framework for a trade deal or getting closer to a trade deal, it looks like, with South Korea and ahead of the meeting potentially between President Trump and President Xi Jinping of China. And of course, we're still watching an awful lot of earnings this morning. So all of that pushing futures higher. NASDAQ futures leading gains up by 0.4% as we are on NVIDIA 5 trillion watch. And let's dig into these top stories of the day now. NVIDIA set to open at that $5 trillion market cap ahead of big tech earnings today. Boeing reporting third quarter results. Plus, the Federal Reserve expected to cut interest rates by a quarter point. Joining me now, senior reporter Brooke DePalma live at the NASDAQ, senior autos reporter Pras Subramanian, and Federal Reserve correspondent Jennifer Schonberger, all with me here this morning. Brooke, let's start with you and NVIDIA 5T watch.
Good morning, Julie. That's right. We're looking out for that $5 trillion market cap at this morning's trading session open. Right now, the number that we're watching out for is for NVIDIA stock to open above $205.76. That will allow the company to cross the first company ever to cross that $5 trillion valuation. And right now, as you can see on your screen in early innings here, the stock is indicated to open higher than that. So we are optimistic there. Now, this comes on the back end of a few things. Yesterday at NVIDIA's GTC conference, CEO Jensen Huang hinted at this data center revenue through the end of the next year that surpasses Wall Street's initial projections. He had suggested that it's seeing strong demands, it's seeing strong orders for that Blackwell chip and also that early Rubin chip. They believe, or he had suggested, that it would be above $500 billion worth of revenue throughout next year. Now, we're getting some commentary this morning on the street, including from Bernstein analysts, saying that even assuming the most conservative interpretation of that commentary around the $500 billion revenue from both of those chips, he said that that would suggest that their assumptions for data center sales over the next 6 quarters are roughly 20% conservative. And so lots of potential upside there. Now, in addition to that, NVIDIA also announced partnerships with Uber. They announced partnerships with Lucid and also plans to make an autonomous flight with Joby. And so that was a second factor that's going into this optimism. And the third thing here is those ongoing negotiations between President Xi Jinping and President Trump. We have heard that President Trump does plan to discuss the company's Blackwell chip and also that he could ease restrictions on chip exports to China. And there's lots of optimism there because one BofA analyst is saying that investors currently have a zero China expectation. So any resolution that happens between these two leaders could be positive for the stock as well.
And Brooke, of course, we're buckling up for all the large cap tech earnings after the close. Not all of them, but a bunch of them after the close today. I'm seeing sort of modest gains for most of them in pre-market trading.
Julie, the excitement doesn't stop at NVIDIA. Let's extend it. Let's just make today also big tech earnings as well. And so on this Wednesday after market close, we are expecting Alphabet, Meta, as well as Microsoft. They're all expected to report. And then on Thursday, we're also expecting to hear from Apple as well as Amazon. So really a good chunk of the Mag 7 here. And going into these Q3 reports for these big tech companies, well, the expectations have been high. And one analyst at Deutsche Bank is saying that any conservative commentary around capital expenditures, around that CapEx spending, that will be met by a negative reaction from the broader market. What we've been watching over these past few months is really this run-up, this excitement around AI. And so we'll be looking for these big tech companies to share more around their AI spending, the progress, and any signs of a pullback as that AI bubble risk continues to be top of mind right now for investors, Julie.
And we should also mention it's not just big tech earnings. We've got a lot of other earnings that are out this morning as well. So we should not ignore them by any means. Props for that. I'll go to you on these Boeing numbers and a big write down that was maybe expected, but maybe not quite the size.
Yeah, just a few things here from the report. You mentioned that write down. So there was the reason why, Boeing beat on revenue, but they had a big kind of core loss per share, and that's because they took a charge on that 737X wide body jet. That's their next generation wide body jet. Hasn't gotten certified by the FAA yet, and now it's delayed till 2027. The original timeline was 2020. And then 2026 and now 2027, taking a $4.9 billion charge, not great there. That's why that core loss per share is so big. Now, what's good here, as I mentioned, the revenue beat up 30% compared to a year ago. But even nicer was the adjusted free cash flow came in at negative $238 million. Doesn't sound great, but it was compared to estimates of $884 million. And a year ago, it was $1.34 billion. So Kelly Ortberg, CEO, is really kind of reducing that cash burn rate, upping production, getting those planes out the door. And speaking of planes out the door, talking about 737 MAX, production's been focused there, right? So the FAA certified them for 42 planes a month. Ortberg said that they're sort of stabilized at 38 planes, and they're going to ramp up eventually to 42 and then 47. Now, remember, a year and a half ago, 2 years ago, was all the production issues with the MAX, with the Alaska Airlines blowout. I mean, people didn't even want to fly on 737 MAXs back then, but now that's sort of changed. A lot of people are just not a concern anymore. So a lot has happened in a year and a half, and since last August when Ortberg was installed as a new CEO.
Yeah, and so last August he was installed as CEO, so a little over a year into his tenure there, and this quarter, as you said, there's like kind of a lot of puts and takes here. The stock is not doing very much. So what's the sort of read through on what this tells us about the progress that he's made?
I think it's possible that because the FAA allowed for 42 planes per month of the MAX, they thought that Boeing would already be there, but Ortberg said they stabilized at 38, so they haven't reached that production output yet. And I think that's sort of maybe a downer because of the fact that they have their backlog is so big. It's like over 600 billion, right? So they need to kind of plow through that, get the planes out the door, improve profitability, get rid of the cash burn, right? But when are they going to be positive cash burn or cash flow? That's the big question. I think that might be the one problem that people are having is like, why aren't they at 42 just quite yet? Well, they had a lot of problems, and it takes a lot of time to clear out those dark factories they had and things like that. I think that might be why the stock is sort of wavering here in pre-market.
And then we've got lots of earnings, we got lots of big tech, and then of course we have the Federal Reserve. Jennifer, what are you watching for today, considering there is this broad expectation that they're going to cut rates?
Yeah, Julianne, just want to note that the second day of the Fed's two-day policy meeting just kicked off moments ago here in Washington. So officials underway right now with discussions, but I'm watching three specific things today. First, will we see dissents? I do expect at least one dissent from Fed Governor Stephen Myron. He essentially pre-announced ahead of today's meeting that he wants to cut by 50 basis points. I'm expecting the Fed to cut by 25, so I think he will dissent. He believes that we are not seeing any inflation pressure from tariffs, and he wants to get to a neutral rate faster than many of his colleagues. On the flip side, I'm also looking to see whether Kansas City Fed President Jeff Schmidt or Chicago Fed President Austin Goolsbee could dissent because they are concerned about inflation. Ahead of this meeting, Jeff Schmid had said that he felt that interest rates were in the right place right now, and if the Fed were to cut further, that could ignite demand and give firms pricing power to pass on higher costs from tariffs to consumers. And Goolsbee had raised concerns about the notion that inflation has remained above the Fed's 2% target for 4 or 5 years now, and just sort of counting on that textbook idea that we're only going to see a one-time increase in prices didn't exactly give him solace. I don't think they ultimately will dissent because they don't want to rock the boat, but still watching for that. Second, I'm also watching for whether the Fed announces a definitive timeline for stopping shrinking its balance sheet. Ahead of this meeting on October 14th, Powell announced that the Fed will stop that in the coming months. Some analysts have said we could see that stopped at the end of this month or in November, so watching for that. And then lastly, watching for what Fed Chair Powell says during his press conference. If he offers any clues about December, I think he's probably going to be non-committal, though. He's going to say we're data dependent, we're going to take things meeting by meeting. Of course, the Fed is still very much waiting on data because we have been in this government shutdown. Also looking for any commentary on what could take the Fed off the current trajectory for monetary policy and further rate cuts, and whether he sees any alarming signs with those subprime loan losses that we saw from those auto loans.
Brooke, Pras, Jennifer, thank you so much. Now time for some of today's trending tickers. We are watching Verizon, Caterpillar, and Fiserv. First up, we have Verizon, the telecom company, out with its third quarter results. The nation's largest mobile service provider reported gains in revenue and profit last quarter. Dan Schulman is the former CEO of PayPal. Remember, he's taken the helm at the company, and he laid out an aggressive growth strategy to try to take back market share. That C-suite reshuffle comes after 2 consecutive quarters of subscriber declines and a stock performance that has lagged Verizon's rivals. In the third quarter, Verizon reported a loss of 7,000 mobile phone customers. Next up, we got Caterpillar. It's topping earnings estimates amid rising demand for energy equipment. The manufacturer posted higher third quarter revenue as AI data center drove demand for its energy products. The company has emerged as a key supplier of power producing equipment. That includes turbines and generators, which have helped diversify its sales, and it's much more weighted towards those types of sales now. And finally, Fiserv. Those shares plunging after the fintech company cut its full-year profit forecast. Fiserv, one of the largest providers of technology to banks, and the company's change in forecast comes after it reported a 3% decline in revenue in its financial solutions segment. That division provides the underlying technology for legions of banks and credit unions across the country. It also announced a broad overhaul of its board and top leadership committee. Those shares plunging by almost 40%. As always, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Coming up on Morning Brief, we'll count you down to the opening bell. We'll be right back. NVIDIA is set to open above a $5 trillion market cap. That could happen as soon as today. 205.76 is the number to beat here. This is just months after it hit the $4 trillion mark. It is the latest milestone in the AI-driven stock boom that we have been watching. So let's talk about that, even as we are still seeing a narrow-led rally here. Joining us, Brent Schutte, Northwestern Mutual Wealth Management Company CIO. Brent, it's good to see you. So I do want to talk about NVIDIA for just a second here and this enormous AI trade that seems to show no sign of slowing down. I mean, we've had some little bit of fits and starts, but overall, it's just up and up and up. Do you just sort of risk being bulldozed if you don't hang on for your dear life and ride this thing?
Yeah, I mean, certainly you want to have exposure to it, but how much exposure do you want, given the fact that single stock concentration can be incredibly risky, especially longer term, where at least historically the winners of one cycle typically aren't the winners of the next cycle. And that's where I think investors should continue to diversify because no one knows exactly what's going to happen. And as you mentioned, the market's been incredibly narrow because the economy's been narrow. So if you think about the past year or so, You've had parts of the economy that have been impacted by interest rates and parts that haven't. Those parts that haven't are mainly AI in nature and higher income consumers. And that's where you've seen an incredibly narrow market, which at least historically has given way to a broader market. And that's why I would encourage your investors to stay diversified across the spectrum, but obviously while continuing to own some of those names that are benefiting today. How
do we know that history is going to repeat itself, or that historical reversion to the mean is going to reassert itself? In other words, it's already been narrow for a good long time here. What's to say it can't continue to be?
I think history does repeat because we are the human beings who have written history and the human beings who will write the future. And so if you think about that from the standpoint of economic agents, we are the people who have driven the economy in the past, and we are the agents who are driving the future. We are the people who invested in the markets in the past, and we're the people who invest in the markets in the future. And we are all behaviorally flawed and have been throughout history. And so history certainly can change. The economy is a bit different than it was over history. But if you think about all the things that are the issues that humans have, they are the same issues that we've had before. And that's why I think you see booms, you see busts, you see bubbles and everything else along the lines. And that's where I think history is a pretty good guide for what happens next. And at least going back 50, 60 years, every narrow market has seen a broadening market on the opposite side. And today's market, the percent of stocks that are actually beating the S&P 500 is as narrow the last 2.5 years as it was in 1998, 1999.
Does the broadening have to come with the bubble bursting?
Yeah, I shouldn't have used the word bubble, I suppose. I think it doesn't have to occur that way. What's likely to occur is what you're seeing today. Maybe the kind of the train tracks are being laid. If you think about my opening comment about interest rates being the impact and kind of being the dividing line between the parts of the economy that have worked and the parts that haven't, you're seeing rates move lower. The 10-year is 80 some basis points or so off its earlier high this year. The 2-year a similar amount. And that's where if you think about those rate cuts coming, hopefully that continue to bring rates lower, you're likely to see small caps and mid caps, which are more economically sensitive, which are more impacted by rates, do just a bit better, as well as the housing market, which you saw today, some better housing data.
So if you're looking to small caps here, and this is a group that, the recovery there has been long anticipated and finally has started to materialize, Brent. Do you buy one of the indexes? Do you apply more of a screen? How do you think about your small cap strategy?
So we use the S&P 600. One of the pushbacks I usually get is these are unprofitable companies. So if you want profitable companies, go to the S&P 600, which has a profitability screen within it. And then certainly active management, I think, will do better in the coming years, even in the large cap space. So if I go back to 1998, 1999, which I think this time period has tremendous echoes of, it doesn't mean that it has to be a bad ending, but what it does mean is that active management did much better in the coming years as you saw the market broaden out from that 28 and 32% in 98, 99 of stocks beating the index, which is what it is today. And it's 31% this year. You saw a much broader environment going forward, which is when active management tends to do better because most active managers don't concentrate in a few names that have driven the market higher, which is what you've seen today. And as it broadens out, that is a much better environment for active management in total.
Hey, Brent, I'm curious if this thinking or this message is a hard sell for your investors. I mean, they're looking at NVIDIA 5 trillion. They're saying, I want more of that. Are you finding it difficult to convince people?
I've done this for 31 years, and every time there is a market like this, which occurs typically later in an economic cycle, think about the late 1990s, a similar time period. No one wanted to own international. No one wanted to own emerging markets. Everyone wanted to own tech stocks. No one wanted to own commodities. The next economic cycle saw those asset classes that I mentioned that no one wanted to own do better, to where I got to the period in 2007, 8, 9, and even 10, where no one wanted to own the U.S. any longer because it was long believed that the Eurozone was better, that China would eat our lunch and become the world's dominant economy, and that's where people wanted exposure. And that's where that over the next few years proved to not be the place to be. And so, yes, that is why investing is hard. And that takes me back to the opening comment about the behavioral flaws that we all have, where we draw trend lines out forever and believe that they will continue in perpetuity. I imagine that in the next couple of years, we will be sitting here. We will not be talking about technology stocks in the way that we are today. And there will be a different group of leaders pushing us higher, which at least in the history of the investing world that I can look back at has occurred each and every time.
Okay, so if small caps are maybe part of that leadership, is there another part of the market that you think is really being underappreciated right now that, a few years out, maybe we are going to be talking about?
The one that everyone hates the most, international stocks. And so if you think about the US dollar, which I do believe the US dollar is going to push lower in the coming years, that is not a comment that it won't be the world's reserve currency, just a comment that it's a bit overvalued. There's quite a bit of money that has flowed into the United States. Potentially some of that pushes back out as investors become interested in other places. And I think the administration would like the dollar to be lower to help our trade deficit. But this is where, if you look historically, the direction of the dollar has determined whether or not U.S. assets win or international stocks win. And so when the dollar tends to fall, you do have international stocks win. And if you think about it, if you're investing in Europe and you're taking a dollar out of your pocket, you invest in euros, you buy the euros, you get the profits and the dividends in euros. And when you go to return them to your profit or your pocket, if the dollar has fallen, you buy more dollars, which is a tailwind to your return. And that's what's happened this year. So international and local currency is up about 20. In dollar terms, it's about 29%. The dollar index has fallen by about 9%, and I expect that tailwind to continue in the future. And maybe just one last one real quick. I do think real assets such as commodities, I do think you are likely to get into a period of higher inflation in the future, which means you probably need a bit of real assets in your portfolio. Commodities, typically broad commodities, have the highest correlation and beta to inflation, which I expect to be something that we're going to be talking about somewhere into the future.
Super quickly, Brent, do you like gold as part of that?
Gold is a part of a broad commodity complex. Again, I would not concentrate in gold, especially given the run and kind of the push that it's had by individual investors. But certainly it is a part of the broader commodity complex. But I wouldn't make it my only answer in commodities.
Gotcha. Good to see you. Thank you so much, Brent. Appreciate it. And tune in to Yahoo Finance starting at 2 p.m., by the way, for full coverage of the Federal Reserve decision. But coming up on Yahoo Finance next is Opening Bid with host executive editor Brian Sazi, who's with us now. We have some outfit correlation today. I don't know what that's. Is that a Fed signal of some kind?
No,
a 5
Julie,
trillion signal?
This wasn't planned. It signals nothing. And look, we're not talking about gold on Opening Bid. We're not talking about crypto. We're not talking about small caps. We're not talking about broken charts. All in on NVIDIA. NVIDIA, maybe with a small dose of potential Fed rate cuts, but I'm all in on NVIDIA, Julie. If you didn't get it, this is going to be an NVIDIA packed show. All in on NVIDIA.
NVIDIA?
NVIDIA.
Okay. All right, Saz. Looking forward to it. That does it for Morning Brief. We get the message. You can watch all about NVIDIA next on Yahoo Finance.